Hi, Sam Volkering here with you this week, and we've got a very special guest on board with us today, John Ciampaglia from Sprott Asset Management. John's the CEO at Sprott Asset Management, and bringing him in to have a bit of a chat today about the energy markets, but more specifically, we'll dive into nuclear and the uranium market and his views on what's happening, what's coming down the track. And as I say, John brings a particular set of expertise to the table, and we're very privileged to be able to chat with him today. So, John, thank you very much for taking the time to chat with us. I think what would be great would be maybe just give our readers a bit of a background on your expertise in what you do, Sprott Asset Management, and as I say, your sort of areas of expertise.
Yeah, sure. Thanks for having me on. Great opportunity to connect with your viewers and listeners. Well, I think Sprott Asset Management is a very unique kind of boutique asset management firm. And the reason being is that we focus in a very specialized area of the market, which is metals and mining. And unfortunately, through a very long, protracted bear market in many different commodity sectors, we saw a lot of these kind of commodity specialists disappear. Sprott is a public company, so we were able to persevere through that downtrend. And over the years, we've built a very, I think, a strong franchise where we manage about $20 billion US dollars, almost exclusively in metals and mining. So those are physical commodities, as well as the related mining stocks. We do active management, we do passive management, we do physical commodities. And the physical commodities that we work in are primarily in precious metals. More recently, in the last 2 years, uranium. And then in the last, let's say, 6 months or so, we've made another pivot to a broader suite of energy transition critical minerals that we think are going to be key inputs for the energy transition that is currently underway around the world.
Yeah, that's definitely one area that we cover a lot here at Southbank Research is the energy transition and the metals and materials and commodities that are needed in order for that to happen. And the thing that gets thrown about a lot with government policy and around the industry is this idea of a march towards net zero. What that actually means is, depends on who you talk to, I suppose. Which means, there's a lot of policy, there's a lot of money going to certain sectors. What's your view on the idea of net zero? Is this something that is inevitable? Do you think that the appetite and environment from investors is not maybe as sort of strong behind the idea of net zero as perhaps it was maybe a couple of years ago? How have you seen just the idea of that and investor reaction to that sort of change in the last, say, year to 2 years?
Yeah, I think there's been a real sea change, particularly in the last 2 years, as you mentioned. I think the first catalyst that we really saw having meaningful impact was at COP26. That seemed to be when governments around the world started taking the net zero challenge more seriously. I think a big part of that was having the U.S. Return to the Paris Climate Agreement. That was obviously a big part of it, as the U.S. is one of obviously the largest emitters in the world, given the size of its economy. And then obviously more recently, we're coming up to the anniversary of the invasion of Ukraine, but this whole narrative around energy security, energy crisis is obviously taken center stage as governments around the world and consumers and businesses have got a real energy shock, whether that was security of supply, having access to critical energy, or obviously the price they were paying for that energy. Last summer was, I think, pretty spectacular set of events to watch as the wholesale price of electricity in the UK, for example, hit all-time record highs. Obviously, prices for LNG and natural gas and coal and oil were all going crazy. It was a real wake-up call. And the world hasn't really had to deal with an energy shock since the 1970s when OPEC really flexed its muscle. But I think the world is now starting to acclimatize the reality that energy is so critical to our day-to-day lives. It's so critical to our economies and our businesses. And then if we don't have secure, stable, affordable, reliable sources of energy, everything goes into chaos. You can see, obviously, developing countries triggers social unrest, government upheaval. So it does have pretty profound impacts, other than just your wallet, your wallet every month when you get your electricity or gas bill. So this, I think, is really accelerated the shift to energy security. Obviously, that transition they want to make as clean as possible in terms of low carbon sources of energy. So what we see playing out is really a renewed push towards more renewables. And that obviously has been a path that the world's been on for the last 30, 40 years. The reality, though, is we believe we've already passed the tipping point where we have so much renewable energy operating in some countries on some grids that the grids are now actually starting to become unstable. I think in the UK, you can relate to that personally when your electricity output from wind farms drops because of wind droughts, or it doesn't rain as much in continental Europe and hydroelectric falls off. So it's all about building grid resiliency, and it's about a very important term, which is baseload power. And baseload power is essentially a term to describe a form of energy production that we can control, basically more or less at free will, and it's very reliable. And there's only a few ways to generate baseload power. And baseload power is basically the antidote to intermittent power, which renewable energy provides. And baseload power comes in essentially three forms. It comes in coal. You can have a coal-fired power plant. You can have a natural gas fired power plant, or you can have a nuclear power plant. There's really only three options. There's no other magical technology that stores energy in large scale, batteries as of yet. And if the world needs to have this baseload power to offset intermittency of renewables, well, then obviously the world is trying to pick the most affordable, the most reliable, and preferably the lowest greenhouse gas emitting. And nuclear energy all of a sudden is starting to be viewed in a very different light, because power plants that we have today run almost continuously, on average 92% of the time. They produce zero greenhouse gases, so they tick the box on that. And there's a third element, which most people are only now starting to understand, and that's energy density. And sorry for giving you a little bit of a science lesson here, but I think it's really important aspect of all of this. But when you think about energy and energy density, there are massive differences between forms of energy. So if you think about how much energy resides in a pile of wood versus how much energy resides in a pile of coal, or how much energy you can release from a tank of natural gas. And then when you think about how much energy you can release from a very small bundle of fuel rods that go into a nuclear reactor, it's mind-boggling. So the energy density, so you think about the volume of a material relative to the amount of energy you can extract, there's nothing that is more efficient than nuclear power. You can literally, drive a couple of trucks to your power plant and unload the nuclear fuel and run those power plants for upwards of 3 years. It's that dense, the amount of energy, and we're talking about a 1,000 megawatt reactor. If you think about the equivalent amount of natural gas you would need to pipe into that plant every day, you're talking about thousands of like rail cars of natural gas to produce the equivalent amount of power over the same period. And so why is this important all of a sudden? Well, obviously we learned the hard way when gas was cut off to Europe and the price spiked, that having security of the supply and having this very dense energy that you can readily store on site becomes incredibly valuable. And so with this, reality of science, governments are obviously doing what we are describing as U-turns on energy policy. Governments that were set on decommissioning their nuclear power plants over time have all of a sudden said, hold on, we can't do this anymore. We don't have reliable baseload power. Gas is cut off, or gas has gone up 4x. We can't do this. And, you've seen countries like Belgium do flip-flops. Even California has flipped. South Korea's flipped. Japan finally announced more restarts of nuclear power plants that are closed. And so I could go on and on and on. And then you've got countries for the very first time saying, okay, there's no way we're going to hit any net zero targets if most of our electricity production comes from burning coal, like it does in Poland. So Poland is signed agreements to build, up to six nuclear reactors for the very first time in its history. So you're getting this big policy shift around extending the life of existing power plants, turning on new ones, turning on ones that have been idled, and then building not just kind of conventional large-scale reactors, but obviously there's a huge push going on right now to develop, commercialize small modular reactors. So these are I think the real future. I mean, we're going to have a two-tiered model where countries like India and China are going to continue to build these very large power plants. But the big rub with those obviously have been very expensive, over budget. Obviously, the UK has been dealing with that issue of late. But the small modular reactors, the hope is that they're much more economical to build, they're quicker to build, and they're more versatile. And in the UK, for example, Rolls-Royce is one of the leading companies that is trying to commercialize their own technology for small modular reactors. Other companies like GE Hitachi have a partnership. Where I live in Canada, they've just broken ground for the first small modular reactor here. In the US, there's a real big push going on right now with the government supporting a couple of companies that are one of them just received their regulatory approval for their design. We think this is going to be in the Western world probably the bigger push towards building additional capacity in nuclear energy. And where are we? We're kind of 5 to 8 years out. Technologies are being approved right now. We still have to build them, but we think that over the next 10, 20 years, this is going to be where we build out a lot of additional capacity. So it's another exciting part of the story. There's definitely a bit of a race going on right now to see whose designs end up, getting the winning approval and get commercial adoption. So there's a lot of things. Now, if you bring it all back to uranium, well, what does that mean? Well, at the end of the day, these are big power plants that are made of concrete and steel and pipes and all that. But at the end of the day, you need fuel. And so you take uranium and you turn it into essentially a form that looks like a yellow powder. So it has a nickname of yellow cake. That powder is then turned into a gas. The gas is then put in a centrifuge and spun at very high speeds. And the purpose of spinning it is to basically separate a very a highly reactive fissile isotope called U-235. And that U-235 is enriched to about 3 to 5% enriched. And at that point, it then is fabricated into kind of pellets. And these pellets go into fabricated fuel rods. And those fuel rods go into the reactor core and create the reactions that release incredible amounts of energy. So we need more uranium. And the reality is that the uranium sector has been in a multi-year bear market up until early 2020. Yep. And so the thesis that many investors around the world are focused on is, okay, if the world is now thinking differently about the role of nuclear energy as part of our energy mix, how can we possibly have the price of uranium at $25 or $28 a pound, have some of the best mines in the world on care and maintenance for the last 4 or 5 years? How can we possibly continue the situation before we potentially run out of uranium? And that was the thesis that many investors had in, I would say, 2018 and 2019. And it really started to take hold in 2020, 2021. And the price of uranium is basically doubled in the last 2 years. And our belief is that the price is still not at a level where it needs to be to incent the levels of production that we anticipate we will need to meet future demand. And so the thesis around uranium is price will continue to rise to incentive levels that will actually spur the development of new greenfield production. What we've had so far in the uranium mining sector has been primarily projects that have been on care and maintenance are slowly reopening around the world. that's starting to stimulate a supply response. And as that supply response comes into the market, you're seeing these uranium miners obviously reap the benefits because they're able to sell future production to utilities as utilities come back to market to procure and rebuild their inventory levels. So it's a very kind of interesting dynamic. It's a sector that, you know, is almost recession proof. And we think it's still, you know, even though we're kind of 2 years into the recovery, we still think it has a long way to go.
So you make a good point about the uranium being in a bear market for quite a period of time. We can now see that there's a lot of, as you say, policy change, and Japan bringing reactors back online, and like you mentioned, Poland that are looking to bring new reactors to market. There's the SMR technology which aims to get these reactors to commercial status, functionality in a shorter period of time. All of this points towards a increasing demand for uranium, and we know that there's probably not enough to meet that demand at this point in time. So what sort of time horizon are we looking at for this sort of thing? Like, notoriously, nuclear plants have taken forever to build, and as I say, SMRs aim to try and bring that back. But is this a 2-year, 5-year, 10-year? Is this like a multi-decade story that we just have to recognize is going to happen in order for countries to get to net zero?
Yeah, I think there's, I think you have to view it in a couple of different ways. I mean, countries like China and India are very committed to continuing their build out of their nuclear capacity. I mean, China, we think, could build 100 more reactors in the coming 15 years or so. India has signaled it wants to build 20 more. And again, these are two countries that obviously need to generate more electricity. They still have, parts of their countries that are energy impoverished. And they're also two countries that still rely pretty heavily on coal to generate electricity. So they're obviously betting pretty big that nuclear is going to help them decarbonize as well as provide reliable energy to its citizens and businesses. But I think in the West, the story is more about not rebuild and not new builds, because that obviously takes much longer. But it's been more about the life extensions. And I think last year, when the state of California, who has always been a very progressive green state, and even though it is one state, it is almost a country unto itself. Their decision last year to not close the last remaining nuclear power plant that they have in 2025, I think was pretty telling. It basically was an admission by the governor and the senator there, who have been very strongly supportive of closing it. The reason they flip-flopped is that they just realized that if they turn that power plant off, that one power plant provides 8% electricity for the entire state, that their whole grid will become unstable. And the California is trying to push more and more into EVs. So how do you charge EVs if you don't have reliable power? So it all kind of goes hand in hand. You need to have reliable power if you want to accelerate the transition to electric vehicles, which some places are doing. But I think where we are in the cycle right now is kind of the return of utilities back to the market to buy more uranium. And historically, they had a situation where they could buy large amounts of uranium at very cheap prices and really dictate the terms and conditions to the producers. And that obviously has changed pretty dramatically in the last 12 months, as they realize that, hey, they're getting government support again for their plants. They're making a lot of money on electricity. They're running down inventories, and hey, my plant might be running for 10 more years, not 3 more years. And so we've seen a big return to uranium contracting. So last year, for example, one of the industry publications said that the utilities purchased 114 million pounds of uranium. And we think that number is completely understated. And the reason for that is because the one single producer, which is a company in Canada called Cameco, they alone sold 80 million pounds under long-term contracts last year. So we think that number is much, much higher. Now, the significance, just to put that number into some kind of context, That's the highest amount of uranium that the utilities have purchased in 10 years. So the market signals, the price signals, the reality of geopolitical risks that have flared up around the world in the last 12 months have prompted utilities to say, hey, we better get back in line and start procuring so that we've got security of supply down the road. And so that return of the contracting cycle, I think, has been the predominant factor why the price of uranium has doubled over the last couple of years. We think that cycle is only going to accelerate over time as inventories are drawn out and they come back to market. Contracting begets contracting is our belief. So this is a very interesting dynamic, and how this is helping the uranium mining stocks. Well, obviously, if you're a company like Cameco and you just sign contracts to sell, 80 million pounds of uranium at somewhere between, depending on the contract, $50 or $60 a pound, it's pretty profound in terms of the revenue line, the revenue impact that that's going to have over the coming years. And it's not just the major producers; it's some of the smaller companies as well are winning contracts for uranium deliveries as they develop new mines. And this is critical because they need to secure the financing to build these mines or turn back on mines that have been on care and maintenance. And these utility contracts obviously give them a real strong financial backing in order to make those big capital investments. And so the sector has been a big beneficiary of this return to contracting. And
Do
it's a
you
very
do you
volatile
anticipate
category.
that we'll see more miners come to market, more junior miners, and a bit more of that hype and excitement around the sector that we saw? I think, what was it? Was it 2011 when the market went crazy?
Yeah, I mean, there was I would say, in the last commodity super cycle in the 2000s, we saw the price of uranium spike all the way to $140 a pound in the spot market. So, if you think about that price in, 2007 terms compared to $50 today, it's pretty astounding. That obviously was really driven by China, massive demand shock with China signaling they were going to build a ton of nuclear reactors. And China was, building 30 new cities and requiring massive amounts of just about every commodity in the world. And so all commodities over that period from the early 2000s up until the financial crisis of '08 really had extraordinary returns. We're not obviously at that period of the market cycle. We're still in the early stages of a recovery. We think this commodity cycle is starting to form, and typically commodity cycles last much longer than stock market cycles. So, we essentially saw, 8 to 10 year bear markets in many commodities. The last couple of years, we've seen them break out of these downward trends, and they're starting to move back up. But commodities have been, pretty volatile, obviously, in the last year, and particularly in relation to, higher interest rates, inflation, and some cost pressures at the mining sites. So, it's a volatile sector, so you have to have a longer term view. Dollar cost averaging into the sector, I think, is always helpful when it's volatile. And you need to kind of do your homework and think about, what kind of exposure do you want in the sector? Do you want to have, exposure to the spot commodity market, or do you want to have exposure to a wider range of the producers, some of the key developers that are opening the next generation of mines, and obviously you take a more diversified approach with the exploration companies because they represent
Yeah,
the highest risk in the food chain.
absolutely.
And many of our investors tend to like exposure in both physical
Yeah.
commodity as well as the uranium stocks to get that kind of 1-2 punch. But it is a volatile category, and I think it will remain volatile, particularly until we get a better signal from central banks that they're getting closer to the end in terms of this tightening cycle.
Absolutely. One more question to finish up on, and there was a lot of excitement and hype in the later stages of last year. I think it was just in December, around the breakthroughs made in nuclear fusion. Um, Shortly and simply, if nuclear fusion becomes a reality, does that kind of play an existential threat to the uranium market?
Yeah, it's a great question. I know, the Department of Energy, Secretary Granholm, they made a real big splash over that demonstration,
Hmm.
and a lot, it kind of made a lot of people scratch their heads because here you've got the secretary, the energy secretary, doing press conferences, and so I don't want to belittle the scientific value of what they were able to demonstrate, but I think from everything I've read and everyone I've talked to, they've said, like, we're still decades and decades away from large scale deployment. Um, Now, if we do have some kind of large scale commercial breakthrough, the reality is that fusion energy would essentially eradicate most fossil fuels. Um, would it get rid of nuclear energy as well? I don't know. It's hard to say, but I think the first victim would probably be fossil fuels.
Yeah.
But I think we're still several decades away. The amount of energy, the excitement was related to how much energy they had to put in versus how much energy they had to put out. But these research lab experiments and demonstrations are still at a very small scale,
Yeah.
very long ways. I mean, somebody once told me that he's heard for decades we're 50 years away from commercialization, and it seems to be a recurring theme.
And
I would
as
hope for the sake of the planet, we get there, but I don't think it's imminent.
I think we've got more immediate pressing energy needs than the commercial realization of fusion energy in another decade or two or three from here. So anyway, thank you very much for joining us and your input and expertise into the market and into what's happening. It's quite clear that nuclear energy is pressing ahead with great speed and force all around the world, and is going to be a critical and key part towards the coordinated moves towards net zero. So it's an exciting time. Like I say, it's a volatile market. Investors should make sure that they do extra research and legwork onto the ways to play that, and that's something obviously we do and have presented to our readers thus far. Opportunities in the uranium sector and in the energy transition sector. So again, thank you for your input, John, and I hope everybody you've enjoyed our discussion today. Thanks for watching, and we'll be back again with you soon. Bye for now.